Alors bonjour, merci d'être venu aujourd'hui. Nous allons commencer notre premier séminaire Pôle 3 et c'est un grand plaisir pour nous de vous présenter notre première invitée. Hello everybody, we are going to start our first webcast for Pôle E3. It is with great pleasure that I introduce you Liz Warren. Dr. Liz Warren est professeure à l'Université de Greenwich. Liz Warren is a professor, lecturer at University of Greenwich, and she's going to present a paper today about the electricity industry in UK. Elle va nous présenter aujourd'hui un papier sur l'industrie de l'électricité au Royaume-Uni. Alors, je lui cède la parole. Thank you, Liz.
Yeah, it's a great honour to be invited over here to do the presentation. And what I'm about to talk to you today is actually something that I'm extremely interested in, not just from an industry point of view, but I also, from an academic point of view, think it's extremely important that academics are very involved in understanding how regulation has a huge impact on industry. And that's roughly what I'm going to be talking about today. Where did this all begin? Well, first of all, the things that I want to talk about today, it's threefold. First of all, I want to talk about how regulation in the UK has had a huge impact in what we're trying to achieve in terms of looking after the environment, making sure we've got an effective system, and making sure that privatised companies actually make and generate the sufficient money to keep them investing within the UK. And that's the crux of the problem that we've actually got at the moment. We're also going to briefly talk about the future of the UK system, because at the moment we're in current consultation with how we can actually improve that system. And I'd like to look at some brief indicators of the difference between Canada and the UK, so you understand the conceptual difference between the two countries. So let's look at the background of the UK then first, so you understand where we've come from in terms of an industry point of view and what we're trying to achieve. Back in 1990, this particular industry was privatised. So the UK government used to own the electricity industry within the UK, but in 1990 they decided that we needed efficient, effective investment, so they privatised the entire industry. Now at that time, you have to understand, we only had one company when it was a nationalised industry, CGEB. Then, when we privatised, they stripped it into three companies. And you had the nuclear end of the industry that was obviously still looked after by the government because they weren't quite sure how that was going to work in privatised industry itself. And then you had two separated companies. But the idea behind the privatisation was they wanted more competition. So they laid out regulations that would ensure that there would be divestment around the 1990s all the way through, and the two main companies, National Power and Powergen, they actually had to divest many of their assets throughout the 1990s. Now, we did see a huge improvement in terms of competition during the 1990s, and by 2001 they decided that actually the system itself needed looking at again, because although we had new competition coming through, it wasn't quite as competitive still as they would like it to actually be. So they decided that they were going to scrap the old system, get rid of the bidding process that the electricity industry used to use in terms of how everybody was paid, and they decided that they were going to treat electricity like any other commodity, and it was traded. And that was the introduction of a system called NETA within the UK. Now, NETA was an interesting, and it's still used, mechanism trading electricity. So we use future forward contracts with our electricity agreements between companies. But the problem we've got with that particular system is that although the majority of the contracts use in future and forward contracts, we do have a spot price, of course, but the volatility of that spot price is absolutely dreadful. So we have a huge problem within the UK in that when the system doesn't actually work, huge losses are actually made by these privatised companies because they have to return to the spot price and pay an awful lot of money to actually contractually go through with the agreements that they've got. Now, in 2001, we had around 40 different competitors. So that was actually a huge achievement that we had in the UK, going from 3 companies in 1990 when it was initially privatised, moving towards having 40 competitors. And in fact, many of the competitors at that time were American companies. So American companies had seen what we called the dash for gas. And that's when we had lots of independent power plants being invested in the UK. And it was seen as generating very quick cash. So the Americans came over in droves and invested in the UK. But when NETA was introduced, it really did cause big complications because we had too many assets. We had too many power stations. We had too much supply, if you like, of electricity, which, as you all would understand, drove prices down. So the prices were driven down in terms of electricity, which was great for consumers, of course, within the UK. But as a privatised company, when you can't actually achieve the return on investment that you're looking for, what do? Well, the Americans handed over the keys to the banks and left. Some of them through bankruptcy and others just simply because they chose not to continue to invest. Now, this actually left us in an interesting situation in the UK because we'd gone from a nationalised industry, we then moved into a privatised industry, something that was very competitive, and then suddenly, around 2003, 2004, one of the biggest owners of assets within the energy industry, the generating industry that is, was the banks. They held the keys to a lot of the assets. So it was an interesting change of play. But, and this is where today's lecture is mainly about, during that point, from 2001 onwards, not only did we have a completely new system in the way that electricity was generated and traded as well, we also at that point suddenly had an introduction of lots of environmental regulation. And this is where the issues began, because it treated different assets in different ways. So today's talk, I want to focus on those types of regulation and the impact it actually had on investment within the UK, which has led us to the situation that we're currently in. Now, I'm not going to talk through every single directive that you can see on the slides at the moment. But what I wanted to do is just to show you what's been happening from 2001 onwards. Now, I talk about environmental regulation. But the point that you have to actually understand at this particular juncture is that most of this regulation came from the EU, the European Union. So it wasn't the UK government that suddenly decided to create lots of new regulation. It was actually imposed by supernatural organisations like the EU. So the UK generation industry had regulation imposed by the European Union, but on a national level. And some of the actual regulations that I'm going to talk about today are on the slide currently. And you can see there we've got things like the Large Combustion Plant Directive. And that's one that I am going to talk about because that's based upon our coal investment. And the Large Combustion Plant Directive, the LCPD as it's called, has actually resulted in the majority of coal plants being in the process at the moment of shutting down. So they've got, most of them, had a situation where they had to decide whether they were going to invest around £200 million to clean up their coal generation, if you like, by investing in something called FDG, which was reducing the amount of emissions that was going into the air, basically from the generation of coal electricity. So they had to decide, did they want to invest in the new technology or were they going to opt out? And if they're opting out, they have to be shut down by 2015, which you will see in a moment when I talk you through the current situation, has caused a bit of an issue. Now, in the UK, most of the actual producers, the generators, decided that investing in coal wasn't necessarily a great idea, simply because the environmental regulation that was being brought in addition to the Large Combustion Plant Directive, many of them were offering financial incentives to invest in renewable. So clean technology. Things like in the UK, offshore wind technology is one of the most used in that kind of form. We do onshore wind technology as well, but offshore wind technology is definitely one of the favourites. One of the things that I want to highlight though is the EMR that I've got written down there. It's known as the Energy Market Reform. Now, I just want you to be aware that although it's on my list above there, it's not something that's actually taking place at the moment. This is in consultation. So we're actually going through at the moment trying to work out how we can resolve many of the issues we have within our UK generation industry. Now, competition. I started talking about competition right at the beginning when I said when we were privatised we had 3 companies, then in 2001 we had 40 generators. So what's the situation now? The situation now is quite concerning for many reasons. If you actually look at the statistics, we reckon we have 28 main generators. Now that might sound, well, that's okay, 28 main generators, that's quite good competition, although not as good as it was when we were in 2001. But the biggest problem with that is that I think it's 71.3% of our assets within the UK are owned by what we call the Big Six. So 6 big players actually own over 70% of the assets within the UK. So although we proudly say we're a very competitive industry, we've got 28 players, we're actually not that competitive when you look at it. And what's more concerning is that very few of these competitors are actually British. So we have most of the generators within the UK are owned by companies outside the UK. Now you might say, well, what's the problem with that? The problem with that is many of those generators, those companies that are from outside the UK that own assets within the UK, are owned by their local government. So many other governments across Europe actually own assets within the UK and are part of that system. Now, that's a little bit concerning considering that this was meant to be a privatised company that was meant to be completely competitive, yet we have other governments owning the assets within the UK now. So it's an interesting situation to be in because it makes it very uncompetitive. And what I mean by that is when you've got a government owning a company that's investing in another country, they aren't necessarily, or should I say, they are protected from a lot of the financial, if you like, incentives and problems that we have with normal privatised companies. So the actual British companies that are trying to compete in the generation industry are competing against governments from other countries, which means that they're not on a balanced platform. It's not competitive as it actually should be, which leads us into many of the big issues that we have. Now, another important point to note at the moment is how we are actually changing our portfolio of the actual fuel, if you like, that we use to generate electricity. Coal was one of the major sources of fuel that we had, and still remains so at the moment, but won't be in a couple of years when they have to shut down because of the environmental regulation that's coming through. One of the things that are really increasing now is the offshore wind that I've actually already mentioned. Offshore wind is now going to be one of the significant players in our portfolio. Now, you might say, well, that's very encouraging because it means you're very environmentally friendly, you've got lots of good opportunities there to reduce emissions, and that's absolutely correct. But what happens when the wind doesn't blow? That's the problem that we have because we have no way of storing electricity. Electricity can't be stored at the moment. They're doing lots of R&D at the moment to try and work out if it is possible to store electricity, but we certainly haven't got something that can work at the moment. Now, the issue we have, let's go back to what I said about NETA being introduced in 2001. If you've got a contract to generate electricity and the wind doesn't blow, what do? We can't always go to the spot market because there's no liquidity there. It's increasingly expensive to use that because it is so volatile. So what you have in the UK is you have something that's called a stranded asset. Most companies now need additional assets in case the wind doesn't blow to ensure that they can actually go ahead and complete the contract that they've got, their future and forward contracts. So lots of organisations now have the clean technology. It looks wonderful. We've invested in lots of renewable sources, but we have all the stranded assets sat there just in case it doesn't work, which is worrying for the companies that are doing these investments. Now, just to give you a brief indication what's been happening in the past few years. So what's going on? So I've looked at one of the latest reports by Ernst & Young. And it's quite interesting to see because you'll say, well, this whole talk is about investment, and it will be. I will be wrapping it up by showing you that the UK is absolutely desperate for new investment in the generation side. But if you look at the slide and look at the information on there, you can actually see that we are investing still in the energy sector. I mean, in 2012, we had 11.6 billion being invested in the energy industry. But the problem is, it's not being invested in the right areas. Much of this money is being invested in infrastructure and various other projects, but it's not being invested in the actual assets that is generating electricity. And that's where we have actually a problem at the moment. So investment is taking place. What's interesting, though, is look at where a significant portion of the investment is taking place for the generating assets themselves. Most of it is going into that offshore wind technology that I've already referred to several times. Now, offshore wind technology, as we've said, is environmentally friendly, but you might be saying, it must be very cost effective then to be investing in offshore wind technology. No, that's not the reason why the significant amount of investment's been going in there. And this is where it gets complicated. So a privatised industry, investment is meant to be market-led. And that was the big selling thing that the UK government decided they were going to do. They wanted all investment in the energy industry to be market-led, which makes sense in a privatised industry. But since 2001 and all the environmental regulations been coming in, because the UK government have actually signed up to many of the European Union agreements, we now have a problem because we've got to achieve targets for the environmental regulation, which means we need more renewable investments. So the government decided, well, we have the answer to that. We will give financial incentives to those companies that invest in renewable technology. So now, not only do we not have a competitive market because we've got other European governments owning a significant proportion of the assets within the UK, we also now have a problem that we've got targeted regulation that is providing financial incentives to renewable investments. But what about the rest of the industry? It's not competitive when you have that kind of situation going on. Now, I am not suggesting that the UK generating companies are not planning for the future. Because if you actually look at the planning consents that are taking place in the UK generating industry, you will find that there is a tremendous amount of permits that have already been sanctioned and approved by the governments for other technologies like gas. So when we have gas, we have the combined cycle gas turbines, and they're very efficient, but it's not renewable. And that's the issue that we have there. So we have lots and lots of permits on hold. The biggest problem we've got, and you'll see that I've actually highlighted this in red lettering on the slides at the moment, is that nobody will do anything with those permits until they have more security from the government about what policies they're going to have in the future. Because at the moment, we have a government within the UK that's signed up to lots of environmental regulations, but they have no real energy policy that's backing up any of these regulations. Now that causes a concern for a company that's wanting to invest in a country. You want to know with some kind of certainty what kind of technology the government are actually going to back for the next 20, 25 years. Now you might say that's a big ask, but you have to understand, and I'm going to talk more about individual investments, that unless you have those kind of certainties, why on earth would you invest in the UK when other European countries, their governments are giving certainties to the investors? So that's where we've also got one of the issues within here. Now you might be saying, so what? Everything she's talked about at the moment, lots of countries have those kind of problems. What's the big deal? The big deal is we are now in a situation where energy prices are significantly higher than they have ever been before. So consumers being hit. The energy prices within the UK for consumers is extremely high, and it looks like we may have a problem in the next 2 years because we haven't got enough assets to generate the demand that's required by those consumers. So if you've been reading any of the UK press over the last few months, it's all been about energy. It's been about the prices of energy. Should we be signing up to more environmental regulation? Can you have this green ideology, if you like, at the same time as having an economic crisis? Can we afford the green ideology? That's some of the debates that we're going to do. And the other question is, if these generating companies are have so much money, which they are suggested to be fat cats like the bankers. That's how they're seen within the UK. If they've got all this cash, why aren't they investing? Why aren't they producing cheap electricity for our consumers? So these were typical headlines that we've been having through the UK all the way through the winter. Yes, Sophie?
I'd like to know why is in the UK, why aren't the policies done if the other European countries are doing it and moving forward? What's preventing UK from moving forward as well and giving that security you're talking about?
Yeah, you have to understand within the European Union, although we are governed by the European Union and the regulations come centrally from them, we actually implement them individually as individual nations. And how we choose to do that, we can decide for ourselves. Now, many of the other European Union countries are not privatised industries. So their governments do take responsibility for what's happening in those industries because they're not privatised. The government actually own many of these, or part own many of these industries. Not fully, but part own. So you do get some private investors going into those European other countries, if you like, but the government are supporting them to make investments because they want to see it work. Now, the UK government has a history within the energy sector. It used to be a vote winner. And that's when investments used to be made. When it was a nationalised industry, when it was coming up to vote time, they would make an investment in an area where there was poor employment and it would win votes. And that's how many of these investments took place in the past in the UK history. Since it's been privatised, it's not a vote winner anymore. So a government that may only be in office for 3 or 4 years, why would they want to invest so much time in creating new energy policies when they might not be around by the time it actually takes effect? So it's been forgotten. It's been forgotten because it's no longer a vote winner. The reason the UK government are about to start doing something about it, as you will see a little bit on later on in the actual, if you like, presentation, is because suddenly the UK public are demanding that action takes place because their energy prices have gone so high and they're starting to panic that we could have blackouts in the future. Now, blackouts are not vote winners. So the government now have actually decided, okay, perhaps it's time to create a real energy policy. Because although I said we didn't have an energy policy, of course there's always been an energy policy, but there's not actually been anything fruitful within the energy policy to support investors. Does that answer your question? Okay, so that's the situation we had. Now, if you look at the chart that we've got on the slide at the moment, the biggest worry that we've got is the line at the bottom that's actually in purple or lilac at the bottom. And you have to understand that something we talk about in energy is called security of supply. Okay? Security of supply is making sure you can meet demand. You have enough supply to meet demand. But to ensure that that works effectively, you can't just have a perfect match of supply and demand of electricity. Because we all know with any kind of technology, there can be a breakdown. Something can go wrong, a pipe can crack, a turbine can crack, something can happen, and you have to shut down the entire plant. Now, if that happens, we have a system where we have a company called the National Grid who organises the infrastructure of the energy sector, and they have to ensure that if one power station is taken down for whatever engineering problem, that there is enough supply, a margin of error, if you like, there is enough supply out there, margin of safety, to ensure that the UK public don't witness blackouts. So they can call on another power station to ensure that they generate more and back up the supply. So that's called security of supply. Now, it is predicted, and if you look there, between and around 2015, our security of supply is going pretty close to the mark. We are going to be having such a small security of supply, different margin, that if something goes wrong at that point with any of the main generators, we could potentially see the blackouts within the UK. Now, you might be sat there and say, so what? In America, they're used to having blackouts, doesn't really cause a problem. But in the UK, we're not used to that. In the UK, it would create problems for the government because they would vote with their feet and they would make sure that their voice was heard because they assume that the UK government should be able to ensure that security of supply is actually there. So we can see there, then this graph here is actually by Ofgem, which was one of the regulators within the UK. So this is the regulators themselves, even though up until, I would say, 4 or 5 years ago, the UK government and the regulators, Ofgem, said in public forums that there was no concern on security of supply. Absolutely no problem whatsoever. Yeah?
The infrastructure being maintained for the security of supply is operated by a private company or by the government?
It's operated by somebody called National Grid, which is actually a private company, but they work very much with the UK government. So
it's only one company?
It's only one company, because the rest of the, just to put it into perspective, the rest of the energy sector within the UK, you can have a company, for example, if I give you Iberdrola is one of the companies. Although we don't call it Iberdrola within the UK, the brand name Scottish Power is still used because it's a UK name. So it's not Scottish Power anymore, it's actually Iberdrola. Now Iberdrola, they can own the assets to generate and they can supply electricity to consumers. But the one part of the industry that no generator or supplier are allowed to be part of is the infrastructure. The infrastructure is owned by one company to ensure that there is enough investment in that area, and it remains a section that is protected of our industry. So you can own as many generating assets as you want, you can have as many consumers on your books and supplying, but you can't own the infrastructure itself.
And this body has the power to tell this company to, in case of an emergency, you must supply this grid.
If, of course, that they're not already supplying. So if you are down and you're not generating on that day, you could get a call from National Grid and they'll say, there's an emergency, we need you to get online and generate this electricity. So that is still possible. They have that power to do that. And they would be the ones that would do the controlled shutdowns should a blackout occur. So if demand was higher than supply, and hopefully we won't get to that point, but if it did, National Grid have a plan of a controlled shutdown with, of course, London being protected. So it would go all the way into London before London's touched. They would protect that area because economically we can't afford for London to have any blackouts. Okay? Does that answer your question? Okay, so you can see there that we've got an issue now with security of supply. Now you might say, well, that's okay, you've got a good year or so before this might hit, so why can't you just simply invest in new technology, in new assets to resolve this problem before you have it? But the problem is, it's not quite as easy as that. We've got 3 things going on here that are actually creating some problems for us. We have the lack of investment in the generation side. So we are not getting the investment that we need to secure security of supply. We have increased amounts of regulation coming in that we're still signing up to, and we're still carrying on producing more regulation that's making it even more difficult to achieve this investment. And at the same time, we have this worrying concern about the security of supply. Now, another interesting point within the UK system you have to understand is, before privatisation, the company that produced electricity were legally required to ensure they had enough investment to produce the amount of supply that was required in the UK. It was a legal requirement. When privatisation happened, that legal requirement disappeared. So now, nobody is legally responsible to produce enough supply of electricity within the UK, because the UK government firmly believed that investment would be market-led and there would be no need to have the legal requirement because it would just all work wonderfully, it would all be very competitive and we would have enough investment in the industry. But ultimately, the UK government are going to be responsible for the security of supply because you know, as I've said before, if there are blackouts, people will blame the government. So what's behind those 3 things that I've already spoken about? Well, it's quite simple. The investment, the biggest problem is it's meant to be market-led, but with regulation that is providing financial incentives that is actually making this whole system very, very uncompetitive. We've got the increased regulation that I've already spoken about, and the increased regulation, the issue there is there's no policy to support the increased regulation. So it's not the fact that we've got increased regulation that is the problem per se, It's the fact that there's no real policy to support what is actually happening. And you may say, but I don't understand what you mean by that. But there are many examples across Europe whereby we've had increased regulation. Private investors have invested in certain types of technology because the regulation has suggested that they would get financial incentives for doing so. And then the governments within those countries have turned around and said, actually, we've changed our mind. And so you've got private investors investing millions of pounds, not just a few millions of pounds, sometimes billions of pounds, into assets, and then suddenly the governments have changed their mind. So they're not getting the financial incentives they were promised. Now that's a huge problem if you're a private investor, which is why they want the policies to support the technology that's going to go ahead, so they can have some certainty which countries will be supporting which types of technology. Now, going back to the investments themselves, just to put this into perspective, when I was said at the beginning, one of the regulations was the Large Combustion Plant Directive. When they were making investments in that particular regulation, each investment would be around £200 million just to put in new technology to ensure that they reduce the emissions. Now, £200 million per power plant is quite a significant investment. And they had to decide, do we want to invest in FDG and spend £200 million on a coal plant that might only have 5 or 6 years left in terms of life expectancy, because most of our coal plants were invested in the 60s, 70s and 80s, so that's how old they are? Or do we say, no, we're not opting into that particular directive and we're going to consider building something else instead with our money? And just to put it in perspective, I've shown you up on the slide there just what these investments are like. These investments for a typical power plant of 1,000 megawatts, let's say, and 1,000 megawatts is capable of supplying electricity to around 1 million people. Some call it 800,000 households. It depends which research you actually read. But £600 million is a lot of money. Now, £600 million, that's still not the issue. Going back to our security of supply graph that we had, and I said we have a problem because we can't just suddenly produce new generating assets. Look how long it takes to actually build and secure these investments. It can take between 4 and 7 years to go from the planning stage to securing what is known as Section 36, which means the government have signed off and the company are allowed a permit to build a particular power station, to them producing, building the power station, and then it actually going live. So that takes an awful lot of preparation. Now think back to what I said before in one of the slides that came from the Ernst & Young research. It said that we have a significant number of permits already signed off. The problem is that only takes probably around 2 years to actually do. So they sat on these permits, but to actually start building the power stations will take them another 2, 3, 4 years, depending on which technology they're going for. So at the moment, we've got all these private companies that are saying, we're willing to invest. We have the cash sat here waiting. All we need is certainty from the government that they're not going to be changing direction in the next X amount of years. So that's the problem that we've got in there. Now, in the UK, we have decided that we are going to have by 2020, 15% of our portfolio, generating portfolio, will be through renewables. Now, that's a big step for the UK. You might not think it's significant, but you have to understand that renewables have only really started to shape up and come into our portfolio since that introduction of NETA in 2001. So, for example, the offshore wind technology, that has been building up over the last 10 years. So to achieve 15% of renewables, when we're used to relying on fossil fuels, for example, that's a big change. It's a big impact. It's a landscaping impact, in fact, in this particular industry. But the issue we have here is that the 15% of the portfolio are receiving all the financial incentives. And in the UK, we've had in the past something called the Renewable Obligation Certificates, known as the ROCs. And that's how the government would give the financial incentives to the renewable investments. It's going to change because the new referendum and the reform that's going through at the moment, that is a change in structure, but we can talk more about that later on. The big issue is, what about this other 85%? So you've got 15% of your portfolio that's been given all the financial incentives from the UK and being encouraged to invest in those particular technologies, which we've already said have got issues in themselves. But the other 85% of the portfolio, the generating assets, they've got no incentives at the moment. At the moment. It is considering that this is going to change. But the 85% are realistically what we're relying on to make sure our system actually works. Yet, it's too uncompetitive for them to invest in those other kinds of technologies. So where are we at in terms of regulation? What have we actually achieved? Well, I think it's safe to say that the UK are very happy with the fact that we are moving in the right direction in terms of looking after the environment. And we're quite pleased that we are doing that. I think most individuals within the UK would say it's an important thing to do. We're a very small country, but we should be making our contribution towards looking after the world. But can we afford to do it? That's the biggest we've got. We are very also proud of ourselves that we've got within the European Union the largest offshore wind farms, if you like, section technologies, and that's something that's debatable about whether we should just invest it all in that technology or spread the risk into other technologies, but we've got it. But as I've already predicted earlier, we have now got this big concern that it's simply uncompetitive because of what we've done and how we've achieved it. So we might be very happy with ourselves that we've got all this renewable technology and we've improved emissions within the UK, but the industry itself now is uncompetitive. It's unworkable. Something has to be done, otherwise we're not going to get the investments in to be able to produce the demand that is required within the UK. And there's significant concern about that. Now, going back to what I said before, the UK government said investment should be market-led, and they said there should be no interference from the government in producing the investment. But the government then decided, because they signed up to the environmental regulation at the rates that they did, they would provide financial incentives for renewables. They didn't think about basic financial theory. So when they're thinking about investments, they're thinking that everything's going to be wonderful, everything's going to be market-led, but they didn't consider the impact of real options theory. A company, of course, can choose to go ahead, get a permit that we've already talked about, and sit on it, and do nothing until they get security. So they're more than willing to invest £2-3 million to get to the permit stage and sit on that permit. So they've made a small investment, but consider £2-3 million to get the actual permit is nothing compared to the 600 million of actually producing the plant. So before they're prepared to go into construction phase, they want more certainty with the UK companies, the government. So what they've done in the UK, and most people, especially from an academic point of view, and I'm sure an industry point of view as well, when you want change and you want policy change, what do? You apply pressure to the people that you're going to get that. Lobbying wasn't working. Lobbying was making no difference. It wasn't getting their voices heard. So the next best thing is to sit on your investment and do nothing. And that's exactly what the companies have been doing in the UK. Apart from the renewables, where they're getting the financial incentives and it's very profitable to invest in those particular assets. But the rest of them, as you can see there, we have a huge problem. We've got there 71% in approval. We've got 25% where they've got the permits then decided not to use them, so they've already declared they're not going to. And only 4% in the last few years have actually gone ahead into construction. That's an issue. Yes, Sophie?
Is it conceivable that you will get more than 15% renewable because of this situation, that the investment that are being funded are the renewable ones, that the other ones aren't being made, they're sitting on it. Is it conceivable that there could be a happy outcome where it ends up being 25% of renewable?
I don't think that's about to happen, and the reason I don't think it's about to happen is probably something that I would have naturally talked about in a little while, but we can talk about it now. The UK now, because of these real options and the privatised companies sitting on their investments and doing nothing, they've increased the pressure on the government to do something about it. And we are now going what is known as the energy market reform that I've already mentioned before. And within that, there are new incentives to both renewables and non-renewables that are coming through. But the renewables, there's a cap, if you like, on the amount of incentives that are going to be provided. So if you want to invest, for example, I had an interview with one of the leading projects, offshore leading wind technology in January. And he was saying that we've already put in our bid for the financial incentives. We got in there first to secure the incentives that we want, but there's a cap. So we know we've done first mover advantage. We've got our secured financial incentive for a percentage of the money that they're going to provide. And we know that our competitors are going to have to fight for the remaining amount. So the UK government are going to be putting boundaries around the financial incentives that are going to be provided for both renewable and non-renewable.
But it's impossible to conceive that. Is it because of the thing of the voting that the government doesn't want the blackouts, that they have to cave in because of the pressure?
Absolutely. We've now got to a situation where the privatised companies have said, unless you provide us with secure policy on what you're going to be doing in the future, we can take our money and invest elsewhere. We can invest anywhere in the world. Because remember what I come back to say, majority of the companies that are generating or investing in the UK are non-UK companies. So they're not loyal to the UK. They're not wanting to do it to be nice. They can take their capital and invest anywhere where they're getting security for the investment that they're making. So they've acted beyond that. Could we get to a situation where we have even more renewables? I think it will come in the future. And the UK government are now, if you like, sulking with the European Union, because the European Union have backtracked on the increased targets, and they're talking about banding emissions now within Europe. And that is in conflict with what the UK has been trying to do by trying to increase the amount of renewables. So at the moment, we've got conflicting, if you like, governments at the moment producing different sets of regulation that aren't really compatible. And I know in Canada you have similar issues with the federal and the way that your system actually works, in that sometimes you can have two sections of a country working towards the same thing, but producing ideas and regulations that don't quite match, and that can create a problem. And that's what we have in the UK at the moment. So we do want to become more environmentally friendly. Would privatised companies invest in renewables if they didn't get the financial incentives? Probably not, because they wouldn't get the rate of return that they required to do it. It's not as secure, as we've already mentioned, about the stranded assets that have to be there in order to fulfil the contracts. So we have got that issue as well. That is one of the big problems that we have. Now, the problem we've got is when any privatised company sits there, obviously doing their business plans and their investment plans, they're looking at their NPVs, they're doing their scenario analysis to see the impact on their own portfolios of their own assets. The biggest problem we've got now is the return on investment that they require. They need to put a significant increase on that to cope with the uncertainty that they've got in the UK, because they don't know what's going to happen. So they have to try and build that in to their financial plans in order to make sure that they can cover themselves and to try and attract the capital that they need. Now, this is going back to the energy market reform that I said before. Where are we now? What situation are we in at the moment? We've all finally come up to an agreement, and the regulators and the government themselves have agreed that the market simply isn't working. That this market-led investment isn't working because of the financial incentives that are being biased towards certain technologies, because of the emission targets and environmental regulation. So now, finally, after the industry fighting with the governments, fighting with the regulators to show them that security of supply was a concern, In 2011, the government finally accepted and said, okay, do you know what? I think it is actually about time we had a reform. And so for 11 years, the industry's been fighting for this, and now the UK government have decided to do something about it. Is it going to be wonderful? Is it going to be waving a wand and making sure everything now suddenly works? Well, no, there's still huge debates about what the reform should include. And so they're now looking at how they're going to cope with this balance of ensuring that they've got increased renewables, but making sure it is financially, they have financial incentives to invest in the other assets that we need to make sure the system works, like gas, things like that. It's very important that we keep that part of the portfolio going, because we don't want all of our portfolio to be just renewables. We need some of the other more reliable technologies, if you like, in case the wind doesn't blow, in case the sun doesn't shine, etc., etc. So we have now started looking at the way forward. And the way forward includes many different things. And it's interesting actually today, if you look at there, we're looking at things moving away from the renewable obligation certificates, and we're looking more to doing things like contracts for difference and carbon price support. Now, most of the coal plants I mentioned that were about to be shutting down in the next X years, even if they've invested in the new technology, the FDG technology for etc., they were really coming towards the end of their natural lives, and most of them have been debating about just shutting down anyway. But this was pushed along because of the carbon floor pricing, because there's other regulation that impacts on carbon pricing. And in the UK, the carbon price was increasing every single year. Now, that was making the cost of coal generation incredibly expensive. And it was going to continue to get more and more expensive because of the carbon floor trading. But actually, today, in today's budget, the UK government have just announced they're freezing the carbon price. Now, that is a game changer, because suddenly you will now have these coal stations thinking, well, actually, hang on. If we're planning the future and we were looking at the net present values of our investments and whether it's worthwhile making sure the technology is going to continue into the future, if the carbon price is going to be frozen, that makes it much more attractive for us to continue generating. Now, this had to be done because the UK government expressed themselves, and we've seen the chart that showed 2015-16, this is where we could have the major impact. Now, some of these coal plants were going to be shutting before that. They've now been given the green light to carry on because the carbon price has been frozen. So now that will encourage many of those coal plants to continue for another X amount of years to whatever, or until the UK government change their mind again, of course. But it means that that might help improve that margin of safety. But that announcement only actually came today. It has been speculated for a while, but it was actually announced officially today that that will be the case. But then that goes against what the UK government are trying to achieve with the renewables. So they're giving the financial incentives for the renewables, and then they've just suddenly said, well, actually, we're going to freeze the carbon price. Well, where are they sitting now? Are they trying to get this green ideology going and really go for the environmentally friendly UK in terms of energy generation? Or are they now supporting coal again, which is a complete conflict with what they're trying to do with the other technologies? And so that, no doubt, will be in many of the newspapers tomorrow. What on earth is the UK government trying to do? They were absolutely going for it in terms of renewables, and they were arguing against the European Union for not increasing the emission limits, and now they're supporting the coal technology. So it's an interesting one. This debate is going to go on more and more. Now, on the positives, I've said before, the UK is pretty proud of the fact that we have improved our renewables. We're not perfect by any means. If you look at, for the examples of like Germany, they're way ahead of the UK in terms of renewables and their use, although they've got different problems in terms of their infrastructure and where their renewables are actually located. But that's another story. But on the negative side, we have got this huge strain on security of supply. And the industry have said the only way that they can resolve this very short-term problem in the next couple of years will be to support non-renewables to make sure that we can keep investing in renewables just to achieve those targets. So it's quite confusing, it's quite interesting. It's a bit of a paradox, to be fair, when you think about it. Now, what I wanted to do was finish on a very small comparison between the UK and Canada, because I'm not trying to suggest the problems we have in the UK are the same as the problems you have in Canada, because they're not, they're completely different. And for many of the different reasons. First of all, your country has this wonderful amount of resources, natural resources that you have here. So you have vast amounts of oil, etc., etc. You've got lots of hydro technology that you've got going in this particular part of the country as well. But you have to understand the UK is not like that. We have reserves that are drying up. Most of our coal mines have shut down now. Oil is reducing in the amount of quantities that we can produce. We are absolutely a net importer of the fuel that we need to produce our electricity. Makes it very different. You've got the federal and provincial governments at conflict at times. It can work, and I've seen examples where it works very well when I've researched your particular country in the energy sector. But there are conflicts as well. Just like we in the UK have the national government, the UK government, but we're not a big enough country to have the individual conflicts within the country, but we have the conflicts with the EU that we have to deal with. So we've got that kind of situation. You're one of the largest energy exporters. Now, I know you've got issues there, because I know America was one of your biggest, if you like, buyers of many of your natural resources. But with the fracking that's going on in America now, that's a game changer for you. Absolutely, and I know that there's lots of projects going on to try and secure, if you like, other contracts with different countries to try and overcome this problem. We're one of the leading offshore wind technology, which is great, within Europe, I'd like to clarify. But you've got the largest or second largest amount of reserves of oil, which is incredible that you've got this situation. But once again, that also goes back to a lot of the problems that you've got with between your federal and the contracts you've got with America. Because I know that one of the, I think it's the Keystone XL project, I mean, the American government have been trying to spin this off that it's all about environmental studies that should be done. But we know that that's just a line. It's not really one of the big issues. So you're a net exporter, we're a net importer, huge difference. You rely more on the energy sector for your GDP than we do as well. Now that plays a big difference. So you do get, and I'd just like to point out, when I was studying and researching for the data on this, different reports do give slightly different data. So that's why I've referenced them so you know where I've got them from. And your investment in this particular sector is far greater than what we invest in terms of percentage terms. So you have a very different situation to what we have in the UK. So I wouldn't say that the problems that we have are particularly translate to the Canadian problems. You have your own interesting problems in that particular industry. So what would I like to conclude? Quite simply, I think most of us agree the way forward is to work on environmental protection, to ensure that we are doing things that improve the environment, absolutely, but you have to have the right regulation and the right policies to support this if you're going to do it. Do not make the same mistakes that the UK made, because you can't just keep increasing regulation without having supporting policies that's going to back up the investments that you require. And you have to be very careful in staying out and saying you're going to have this competitive market structure that is going to be market-led investment, and then start playing around with the small areas that you want to play around with, because that makes it uncompetitive. So you have to make sure you're very careful in what you're trying to achieve there. And that's it. If you've got any questions, I'll be more than happy to take them.
We don't have any questions in the room. I'm going to leave it on for a minute or two to see if there's any question on the web. I know there's a bit of a delay on the web.
That's okay.
Are you optimistic or pessimistic?
I'm optimistic. I always think that markets find a way of resolving problems. And It might not be in a conventional way, but there is always a solution. And a solution can always be found. It just might mean that the UK government might have to agree that they've made mistakes, which governments don't like doing. But we know that industry have been arguing these points for a very long time. I can remember going back to the industry conferences back in 2005, 2006, and you would have the industry people, the CEOs of the top companies, arguing and saying, look, we are going to have a problem in the next 10 years unless this, and this happens. And I can remember seeing the politicians and the regulators stand up there and say, there is no problem. And then suddenly they've turned around and go, okay, there is a problem, a little bit of a problem, we might need your help to try and fix it. But the UK are pretty good at doing that. Industry is very good at working alongside the regulators when they're asked to do so. And the regulators have had to rely on industry to help them out many times when the European Union regulations have come in, because they're good at regulation, but they don't necessarily understand how the technology works and how it would fit in with the regulation itself. So can it be turned around? Absolutely. But it will take a lot of commitment from the UK government for it to actually happen.
OK, well, this is going to be it. C'est terminé. Alors, je vous remercie beaucoup d'avoir participé à ce premier web diffusion. Thank you very much for joining this first webcast for Pôle E3. And most importantly, thank you very much to Liz, who came here and gave a fantastic presentation.
Thank you.